Welcome back, everybody. Have my microphone muted. Good to see everyone. I rarely got the mute working, but I finally got it working the other day, and I've been using the heck out of the mute button. So I also have a cough button. It sounds silly, but that's what the fancy people use. They run radio stations and everything else. And one of the guys who helped me set this up used to work for a radio station. So nonetheless, what's up, everybody? Good to see you. Carolina Keith, regular Keith, Professor Keith, all the same to you. I hope you've had a great day. Hope you've had a great weekend. It's Tuesday. It's time to talk about charts. Let's get off into it. Welcome to Charts After Dark. Do me a solid. Go hit the like button. It's free. It costs nothing. While you're there, subscribe and hit the notification bell so you don't miss anything, man. We've challenged 11,000 on YouTube several times. Haven't ever broke 11,000. I'd love to get over that hump. Get it over the hump. Let's see if we can keep going. Push this thing a little bit farther. It's all good. 17,000 is where we hover around on X. We've got about 4,000 over in the Discord. That's after purging bots and scammers. Oh my God, the scammers. It's crazy how many scammers you get, man. And it really sucks. But it's crazy how many people fall for the scammers. All I can do is kind of tell people not to. But, I can't, hold your hand. You know what I mean? People have got to learn for themselves, unfortunately. It's one of those breaks of the game. Watching people lose money to people who are slime balls. It sucks, but nothing I can do except tell you not to fall for it. So, I'm going to start this with the thumbnail. You guys saw the thumbnail. The thumbnails are always legit here whenever we do clickbait. SpaceX. SpaceX launched on Friday at 10 o'clock. It was actually a little later than that when it was actually available for everyone to chart and trade. I think there was a ton of volatility, and the NASDAQ sort of withheld certain things. And I had multiple reports from multiple people tell me that the orders that they were putting in either were not getting filled or were only being filled partially. And that's because they had so much volatility that the market makers really weren't giving them what they wanted. They were just kind of saying, here's what you get. Be happy with it. So it took them a while to let all that dust kind of settle. At the end of the day, on Friday, we ended up doing this pretty gnarly, ugly wick. But boy, that thing changed on Monday. Monday, it throws a gap up. And what do I mean by gap? Well, if you come down to the chart and look on the 4 hour here, you can actually go down to the 2 hour here. There we go. It's a little easier to see. And I'll kind of point it out for you here. This is the closing bell on Friday, this candle here. That's a 2 hour candle. Obviously, we only have a few candles here because we opened late. And then it took a couple hours for the market to play out. Market was ended on Friday. Bam, you're done. And this is the candle that we get. On Monday, it opened higher. That means post-market and pre-market. Post-market on Friday and pre-market on Monday traded higher. And as such, we opened up at a higher level from here to here. That's about, it looks like 161.25, and then reopened at about 171.50. And what that means is orders were too large and created a massive gap in price. And as such, you created a CME gap. Now, the interesting thing about a CME gap is typically these feel. And what I mean by they feel, well, typically after you have a dramatic run up on a weekend move or a dramatic run up in post or pre-market, just like we had, a candle usually comes back down and closes that gap back to where it closed or back to where it opened, and sort of completes that gap and removes it from the market. Sort of test those market makers to see whether they were legit, whether they were full of it. In fact, it happened again on Tuesday morning. Market closed on Monday afternoon and then reopened on Tuesday morning with another gap. Now, mind you, at the end of the day, what do we get? This right here. You can see that after that push up, we threw a bit of a long tail on the top of this candle, a long wick. That's indicative of some sell pressure. All right, that sell pressure shows up all the way throughout the chart. And since we don't have a ton of data, I've gone down to the lower time frames here so we can sort of see a better view of it and try to grasp it a little easier. Just having three candles, you really can't analyze. You know what I mean? It's kind of tough to draw realistic data from three candles. And I'll be the first to admit that's not enough data. So let's go a little lower. We go down to the 2 hour, we go down to the 1 hour. We'll find a little bit more data here It's risky. It's risky being down on these low time frames. So we're not going to put too much emphasis into it. We'll just look at it for what it is. So Tuesday, we throw another gap. We run all the way up to $225 per share, which puts this thing at $2.97 trillion market cap. That is good for the fourth spot, the number 4 spot in the entire world as far as company valuations. All right. It passed NVIDIA, Facebook, Microsoft, all of them. I believe the only 3 it didn't pass. Oh, gosh, you'd have to look it up, but the top 3 are still there, right? Point is, it went way high real fast. It was the biggest launch of all time. As such, it can't last forever. Things must slow down. It's hard to explain to everyone, but when you have that big of a market cap, it's very difficult to multiply your money. All right? It's very, very difficult to multiply your money. When you have $3 trillion, it's extremely difficult to get to $6 trillion. It's much easier to go from $200 to $800, right? It's really, really difficult to go from $3 trillion to $6 trillion. That's like so much money. In fact, $3 trillion is 1/10 of all the money in the U.S. You know what I mean? Like, you got to be realistic here and realize that this can't stay up this high forever, but it did it. And we must talk about the fact that it did it. So anyway, we ran up, created a bit of a tail on the top of that candle, a long wick. That's indicative of sell pressure. We also have a bit of a resistance wall right there forming on the 2-hour. And if you drop down to 1 hour, you'll see it a little bit better. There you go. Resistance wall kind of hit, and now it started to fade back a little bit and slow down some. We didn't quite close that gap. It's still there, gap to about 192.45. It shot a candle down to 195 and some change. It did wick it back up before the end of the day, so even it doesn't want to slow down just yet. It's a lot of buy pressure with a little bit of sell pressure. It is worth noting that it's already done this one time through a red candle and had 3 more back behind it on the 4-hour, bang, 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 to pop right back up to 225. It's a very, very impressive showing. I was very vocal with saying I wanted to see this thing down to $100 so I could get in lower. I wasn't buying it at 175. That's crazy money. And 225 is even crazier. Hence why you see shorts come flying in. That high of a valuation is just madness. And while, yes, you could potentially just buy and hold this thing long term, I need you to understand that only works for the people who can consistently buy and hold long term. That's about 14% of the population. Can the rest of you buy and hold long term? No, you can't. Because you either don't have the consistent funds to continually put into something that buys this all the time, or you just don't have any money to do it at all, or the third option, you don't care that much. You just give your money to someone else, they manage it for you, and perhaps the portfolio that you're in might have some of this, but it's not really your choice. People have got to start to realize that just because you think something doesn't mean that's a reality. I know immediately when you see charts go up, oh, it's because people are buying. All right. While you're not wrong, that's such a broad understatement that you are wrong. All right. It's a massive, broad understatement. So what do I see here? Well, I'm going to kick it back to the KuCoin pair, SPCXUSTT. There's a perpetual pair here for KuCoin. It's been out for a while already. I'll flip it to the daily here, and they did delist and relist this, so it looks a little bit cleaner than some other ones that I've seen, but obviously that's a clear breakout on the daily. And you've just had the 21 EMA reappear, which is at about 183 right now, 8 EMA back at 187. And again, with that sort of tail on top like that, that is indicative to me to say it's going to start to slow down at some point. I want you to notice that it also scraped this previous high here and has thrown a sell pressure wick on top of what would be the previous high listed over on KuCoin, which is some of the best data we have. It's sketchy, shaky data at best, but it's some of the best data we have. It would make sense for this thing to slow down at least a little bit, potentially back to 187 to 190. That's where the 8 EMA and 21 EMA sit on the daily chart. We kick it back to the 12-hour, 190 to 181, roughly that same range with a couple dollar difference. Makes sense, you know. I'm going to sneeze. Excuse me. That was a violent one. Shook my back and everything. It only makes sense for this thing to slow down a little bit before it grabs another bite of steam and tries to go farther. What's up, Distinctive Shine? Good to see you, brother. Who else did I miss? Nobody else yet. Regardless of the fact, I'm still going to watch it. I'm still going to update this daily. I'm going to put these updates on X. Some will go up on YouTube. You'll be seeing it here on YouTube first. I'm going to update this thing daily. We also have a section in our Discord just for this. We talk about it all the time. 24/7, nonstop, 365. What you didn't know was, if you weren't in our Discord, you could have been trading this pair already for multiple days. Perpetual contracts, obviously not the same thing as buying the actual stock shares. But for what it's worth, most people couldn't get all the orders that they wanted to in anyway because the market was so volatile. And I don't think it's over. Eyes on it. Keep your head about you. This is a ton of money, folks. It's like, again, it's 10% roughly of the all the money in the United States. And interestingly enough, let me hit my nasal spray, dude. I'm struggling over here. Goodness, that was a long day, fellas. Whew. It's hot, and I gotta be honest, I'm tired. I'm tired, physically drained. Last couple weeks have just drained me, and the body's starting to react to it as such. I'm getting old, man. I'm getting old. Anyway, that's 10%-ish of all the money in the United States into one thing at one time. That to me just spells recipe for disaster. You know what I mean? Is what it is. I also saw, interestingly enough, that there's a very high probability over on Polymarket or Kalshi, one of the two, that SpaceX and Tesla would merge at some point, which throws it into another astronomically high market cap. You know what I mean? So if that happens, boy, they got to work out the shares on that one. I've got a bunch of Tesla. That'll completely reset everything. It'll probably be wise for me if that point happens, depending on the chart, to sell it and back out and restart. You know what I mean? And on that note, let's look at Tesla before we get into any crypto stuff. So last few days here, Tesla's gone a bit back and forth. She did fall off very, very rapidly, descending all the way under the 50 moving average. Not great. You don't want to see that. But last couple days, she jumps back over the 50 and the 100 moving average while getting squeezed by the 200 and the 821 EMA. So it's a bit neutral here. I lean bearish only for the fact that it's underneath that 200 moving average, and that's a tough nut to crack. You don't want to fall under that. It's very, very sticky. If you look at the Ichimoku cloud, things are a little bit more optimistic here for Tesla. You've got it's a green cloud on the end. That's one check mark. That's good. Wrong button. There you go. Next check mark, lag and conversion. You do not have this check mark. Wrong. That's an X. Why? The red is over the blue. We want the blue over the red. We want that conversion line over the baseline, the blue over the red. We don't have that. Lag line over the candles. Uh-oh. Not great. But the price is over the cloud. So you've got 2 out of the 4 that you need. Even it's a bit neutral on the Ichimoku cloud. Pivot points. You're under the main pivot, but you're over S1, and you did bounce off of it. Neutral to bearish. Looking at your oscillators, your MACD has made a significant swap down here, but it hasn't quite continuously crossed both lines over the downward midline. Sell volume is slowly deteriorating, and you are starting to get some divergence between your 2 MACD lines. You want to see them pinch together here and turn back the other direction. Your RSI is no help to either. It's sort of neutral in the middle. So what I'm getting at here is SpaceX flying, Tesla sort of neutral. Tesla sort of neutral. So kind of tells you, is money coming from one to the next? Not really. And if so, it's not as much as you think. This thing's fairly neutral. So you can take out some of the subjectivity and the feelings and the guessing just by looking at the chart. It's very, very helpful, honestly, to do that sort of thing. All right, so let's jump over into some of our crypto stuff. So we'll hit the record button once more. Over the last couple of days, we have seen an increase in buy pressure. It's not a truckload, but it is something. Little by little, we're starting to slowly take back all these big losses that we incurred starting on the beginning of the month. I have marked here for us liquidity levels for shorts and liquidity levels for longs, right? So all three of these red lines up here are marked at areas where shorts came piling in, made it very, very difficult on all of us, where the sellers became stronger than the buyers, the puts became much larger than the calls, and it started really pressing price down. At each one of these levels, a lot of the bears' liquidation levels are easy to see because we can see all the orders piled up on the exchanges. We can tell that's where they'll be liquidated because it's just mathematics after all. Those three levels are 74, 77.5, and 82. All three of those are rough, but that's about where they're at, all right? In order to liquidate them, you have to get candles all the way back up to these levels. And as you can see, that's no easy feat to accomplish. Standing in our way, all of the moving averages. Your 50 and 100 is about to have a downward cross, and the 200 moving average just continues to plot its way south, being no help at all. To me, this looks like it's going to take a stab at these moving averages here, but not in a hurry. It looks like it's taking its sweet ass time. That being said, a positive for it is we are over the AEMA with multiple candles. You can see there, we have multiple candles over the AEMA, and we are in the wait a minute zone. What is the wait a minute zone? I've talked about this a lot, but it's a made up term for me, but it is an actual thing. So wait a minute has to do with Shanae from the TV show Martin from the 90s. I grew up in the 90s and I watched every episode of Martin every time it came on. One of her signature sayings, was actually just Martin dressed up as a woman, was, wait a minute. She said it over and over and over again. That's the wait a minute zone. That's 2 closes over the AEMA minimum, but you're not over the 21 EMA yet, which is the purple line, which is exactly the situation we've got. We have candles that have closed multiple candles over the AEMA. Looks like we've got 4 in a row, 1, 2, 3, 4, and we're working on number 5. That's good. It'd be great if it got over that purple 21 EMA. So some good, maybe not enough, but some improvement. Obviously better than nothing. Your Ichimoku cloud is absolutely no help. That's 4 out of 4 negative. Nope, turn that shit off. Pivot points, you're right at S3 and you're actually back testing the bottom of it. Careful, you're playing with the falling knife. You're gonna grab it, you're gonna let it drop first. Well, tough call, be careful. I keep saying it to everyone and preaching this. Take your profits, folks. If you don't take profits, someone else will. Hate to break it to you, but that's how it works. Don't let anyone convince you that they know better what to do with your money than you know what to do with your money. It's your money. Figure it out. I took profits. I'm not telling you you have to take profits. I'm saying it's never a bad day to. Okay? Not financial advice. Do whatever you want, man. Don't listen to me. I'm a nobody on the internet just trying to help people the best I can. Everything you see here is my real charts. If I tell you I bought something, I really did. If I tell you I sold something, I really did. I keep it real or I keep it to myself. Been saying that saying for a long time. Our liquidity levels for longs, well, there's only one level here for us that's really key, and that's roughly $60,000. That's where all of our longs started coming back in and formed a somewhat bottom here for us to start our move up. All right. If you aren't careful and you fail this AEMA, you are almost a lock to attempt at stabbing down here at some point and coming after that 60,000 range to run those longs off. It is much easier, folks. And I learned this from Win Mullet back in the day. It is much easier to chase away the longs than it is to chase away the shorts. So have your ass ready. All right. Depending on where I pull these fibs from, it's a little different here and there. But I'll pull it from there just for the example. From the swing high to the swing low, we have broken the 236 fib and we are hung underneath the 382 fib. We typically see a little more upward retrace than the 382. That lends me to believe we may chase that $70,000 range right through there, the 50 fib, and at the golden pocket, you've got that 72 to 74. Both of those remain viable options on the way back up. and would be points of reversal that I would look for this shit to bring us back down. Last thing on Bitcoin here, or I have two more things. I have this marked level over here. Rebuy this vertical line here after the bull run is over late 2026. I've shared this chart 100 times. It's where I'll be rebuying everything. Inside this vertical box right here is my go point. Now, what I'm weighing back and forth on is exactly where it's going to be. You know what I mean? Doesn't matter to me really where. It's the timeline that I'm looking for. This has been, from inside this box here, has been the time when we found or been very close to our bottom on Bitcoin historically. All right, we usually have a year-long-ish bear market, and this is the point where that year-long-ish bear market would be done, and 100% where I'll be looking to rebuy everything. That's me being out and honest and open for everybody. No BS, no games. That's really what I'm going to do, and I'm going to do it all in front of everybody so you see me. I've made it a point over the years to say this stuff and mean it, and I mean it. Right? I've tried so many times to get people to listen. I've realized over the years that you won't. About 3 out of 100 will, which is crazy. But those 3 out of 100 I've made lifelong friends with, or personally met and personally helped change your life. We have changed lives with charts. It's crazy to say that, but we have. I could tell stories for quite a while. And if you're in the Discord and you hung out on our Zoom calls, you've heard me tell the stories. Last bit. 200 moving average still hanging on the weekly. As you see, you did pop up off that 200 moving average with a little bit of volume. I like that. It's still hung under all the EMAs, the 8 and the 21. And then you have your 50 and 100 crossing downward up here. Again, that makes me think we got a little bit of up here before we get any more down. It is of note that in past bear markets, we have failed short term on this 200 moving average and sort of dribbled down underneath it before. And we also bounced off this 200 moving average, never looked back. That's what I'm hoping's happened. And that we just revisit 60,000 and then that's the bottom. If that doesn't hold, we have a solid opportunity to get this thing down here to 50, 60, 55. And worst case Ontario, pull the rug out from under your feet down into the 40s. I'm not going to go that far yet. We still have several months to go. I'll just keep watching and waiting and trying to play it safe. I think that's the best thing to do, is just trying to play it safe. I've learned over the years to be very careful about what I say also, because if I don't, you guys attack me for saying things that I didn't even mean. Back in the day when we first started this channel, I'd say whatever and didn't really care. But after multiple rounds with lawyers, a lot of money spent, I don't know if I want to play that game anymore. It's not a fun game to play. As they say, play stupid games, win stupid prizes. Ethereum looks slightly better than Bitcoin here. You have broken the 8 EMA. You are working on your 4th, not your 5th candle, but it is pushing into the 21 EMA there on the daily. I like that. Weekly is a bit spooky though. It's under the 200 and everything. And again, if you look back, I take the moving averages off because those don't work, right? That's fine. You're still under the trend line and buried. Your long levels down here did liquidate. As you see, you come down and tickled all through here. This is 2023, 2023, 2025, and again, 2026. You've bounced that level multiple times here, snuck under that level multiple times, and then had buy pressure come up off of it. The question remains now, are we going to get this sort of move where we come up and then test it back down, which is what I think we get? Or are we going to get this move here where we bounce and ride off into the sunset? You guys don't have to be rocket mathematicians to realize that I don't think that's what we're doing. It's also of note, this is the last bear market for Ethereum. Look how hard Ethereum sold off into the, wait for it, June and July area before it did catch a solid bounce back to the next fib line, only before falling back down and chasing this low one more time. This is the move that I do expect to happen though, right? Summer bounce, into the peak of the summer, and then through the fall and winter, you sort of find your bottom on Ethereum down here somewhere. And then we should see most altcoins find their bottom right along line with Ethereum and XRP, which we'll talk about next. I keep hitting the button twice. Those videos aren't going to save. So here we go. XRP. We do this once a week at least. I try to do it every stream because I think that's just the best thing to do. Trying to do it every stream makes people happy. So I've pulled the fibs on this from the swing high to the swing low, and I'm throwing a warning out here to you. It did hit that 50 fib and bounce back with some aggression. I don't like that snapback, but we are over the 821 EMA. Both of them, as you see. Check it out. 1, 2, 3, 4, 5 over the 8 EMA. That's good. And you have the price over the 21 EMA now, which means you are working on an 821 upward cross, which would be like the second half of a two-part buy. Better, much better, right? Heading toward the moving averages. You've got the 100 and the 50 moving average up high right there, roughly 130 to 135. I do expect those to play hardball and not want to give up. In the event that those break, you're stuck right here with this 200 moving average slowly beating down, and that will not be easy to break. It's at 156. It's going to probably end up coming out to the highs here, right through there, right there where that red box is drawn. What do you know? That's roughly where I think the 200 moving average is going to end up, which would be sort of a hard cap, hard ceiling situation, because you can see how many times the price has hit this level and simply not gotten through. And the last time it hit that level and failed, what happened? Big down, Donnie. Not great, right? So if you can't break that level, you're likely to head back down again. And you can tell by my drawing, that's exactly what I expect to happen. I think after it gets its wave ran, it's already starting to run into some resistance here, by the way. Once it gets its wave ran, it's likely just to slowly dribble out, kind of to the side here for the rest of the summer. Maybe get one more push. The trick is here, will we hold this green box or not? I'm not a fortune teller, so I don't know if it will hold the green box or not. I am hopeful, but I'm not a fortune teller. The two options are holding that green box, maintaining sideways at best to where we hit the trend line over here towards September, or hit this trend line in September and things fell even farther down. And then this will be the bottom come in no matter what. You could have your low already. That'd be great. If you don't have your low already, we will get another low between October and December. You can put a bet on that. Doesn't mean it's going to be the bottom. It could be lower. It will form some type of a low in that range. And that may be where everybody tries to pile in. And you can expect a lot of volatility when that happens. Again, you're not just going to buy and immediately be a millionaire. That's a lie. That's not going to happen. After you do buy, if you do buy that down there, it's going to be a long, slow, drawn-out process for the price to go anywhere too fast. I think we probably peak out in the summer of next year as well. So, again, that could be when you have a better move, though. Get over some of this trash that you've got through back here. But you're nowhere near this yet. It's still quite a long way from anything too super positive. So I'm happy about the improvement. I definitely am. For those of you in the Discord who know, I bought XRP down here at 109, something like that. And I've already taken profits. Thank you. Shout out to John's Milk Money over in the Discord. He happened to ping me right when I was looking away. And I managed to get back in there and I sold like 128.8. Got a bunch of profits. Didn't get the absolute top, got close. Take what you can get. And got some of my profits back out. Super tickled with that. It's fun to make profits in a bear market. I learned my lesson about not taking profits. And you can bet your sweet ass I'm going to take my profits from now on. And again, I'm not telling you what to do, but there's nothing quite like winning. All right, so we're almost done here, and we'll wrap it up in a second. And fellas, I'm going to go straight to bed. I am whipped. I'm whipped. I'll even look at a bunch of altcoins, but I don't know if that's smart. So let's pick our poison here. We did SpaceX. We did Tesla. We can take a gander at Apple real fast. I managed to buy the bottom on Apple and sell the top on Apple. And for what it's worth right now, she's fighting the 821 EMA. It did close back above. That's impressive. Now I could rebuy this and get in lower. I'm not going to do that right now. I'm going to wait and see. It seems like everything's sort of overbought to me. And I know that doesn't make sense with on RSI, but gosh, man, that was only a minimal amount of down. After all that up, and you have the FOMC tomorrow. Since the FOMC's tomorrow, it seems like a terrible idea to try to mess around on a day like the FOMC day. People are expecting nothing as far as rate cuts go. I kind of accept that. I'll say this, even if he does cut rates, it can't be a minimal cut. It has to be more than a minimal cut to really move the needle, okay? If it's not more than minimal, it's not really worth talking about. It's not going to do anything. SMH, VanEck, Semiconductors, big move up with this big bearish engulfing coming back after yesterday's really, really solid jump. Move back down to the 8 EMA. A lot of them seem to have done this. I have a lot of red over here on my top assets board. S&P 500 did something similar after throwing that gap up on Monday, has started to slow back a little bit. NASDAQ, same sort of situation, a bit of a lower high. Here's the Dow, not so fast. Look at her staying up there into the take profit fibs. Looks to be heading to 53,000. To me, it's at 52.5 right now. Will it get there now or later? One or the other, no matter what, I think it's getting there. Really impressive move by the Dow Jones, continuing to hang on when others are slowing down. Google jumped the 821 EMA again, and it bounced off the 50 moving average. I like it. It is a lower high, right? You got a lot of work to do to get back up to that $400 range where it was before. 371 to 400 is not an impossible task. But again, that money's got to come from somewhere. And a lot of money just got put into SpaceX. Is that money going to come out of SpaceX? Well, I don't know yet, but gosh, if you're going to pump all these back up with more injections of cash, that's got to come from somewhere. And 10% being in one asset's tough. Microsoft, the slowdowns continue. Nothing really to jump out at me here except the fact that it did bounce the golden pocket, but you still don't have a buy signal yet. NVIDIA, last one. 821 EMA and the 50 moving average are sort of playing ping pong here and sort of slapping the price back down after it tried to jump over. Not enough juice just yet. Ooh, now this will be the last one. Paramount. My goodness, what an incredible UFC fight on Sunday. I stayed up for the whole thing, struggled my butt off through it, but I made it. What a show. My God. Not only were all the fights great, but the live music and the presentations, the walkouts, oh man, did they kill it. The flyovers, 2 flyovers, the Super Delta flyover, and then the B1 after that. Oh, sickest shit of all time. And then that Justin Gagey walkout. Oh my God. Reading the Declaration of Independence, hanging up, or it might have been the Constitution, I don't remember which one it was, hanging up in the freaking Oval Office, and then slowly walking out, going down the ramp beside all the president's plaques. And they took a picture, and it's him walking by Teddy Roosevelt, who's a big combat guy. He liked combat sports, holding the American flag out while he was coming down. Oh, man. And then comes out there and blistered Ilya Taporia's ass. Oh, my God. Ilya Taporia looked like he got hit by a fire truck. It was brutal. Apparently, he had a broken orbital bone. And I don't know what else broke, but it damn sure was his spirit, because my man sat down on that stool and quit. He beat him till he quit. What a show. Nonetheless, hey man, that's 30 plus minutes. On a Tuesday. On a Tuesday. Yeah, I know the song. I'm an idiot. Appreciate everybody coming and hanging out to watch. I think we got about 100 people total. Yeah, man. I don't expect. Oh, actually, a little bit more than 100 people total. Sweet. I don't expect too much. It's a bear market. We don't do hopium. We don't do meme coin bullshit. We keep it real, and because of that, we get less people watching. Try to be a little entertaining as I can. Have some fun. Can't do too much. Obviously, don't want to get kicked off YouTube again. I appreciate all you guys coming hanging out. You guys are awesome. As I've said before, I should be dead or in jail, but I'm not. I'm right here. So I'm going to make the best of it. All right. Back again Thursday, live 10 p.m. Y'all be good, man. Sky's the limit. I'm out. Peace.